Welcome back to the check-in. My name is Jarrett, and today I am here back with Tatum. Tatum was recently on the Compass Mining podcast. I'm going to leave that link above if you're on YouTube, and I'll also leave it below in the description if you are listening to this on a podcast platform. Tatum, how are you?
I am doing fantastic. I am out on the field today, making sure Bitcoin still works, and good news, it does.
I'm glad someone's checking to make sure the network is still up and running. And, before we hopped on, I asked you if you were in a truck, and you said you were. So if you wouldn't mind, could you hit the horn? Okay, perfect. So if you're on a podcast platform, this is proof.
Everyone's looking at me now. Sorry.
If you're on a podcast platform, that was proof that Tatum is actually in the field in a truck recording this. Thank you for coming on the check-in. The question we want to approach today and just talk about is something that I think we're going to have to hypothesize a little bit. I know we have some theoretical understanding of maybe what's going to happen at the protocol level, but for miners, the question is, and this is just a question in general that people have when they get into Bitcoin, it's one of uber curiosity, because unfortunately, anyone listening to this today is likely not going to be around when this becomes a thing. But if you could talk about what is going to happen for Bitcoin miners and the overall Bitcoin network when the last block is mined.
Yeah, so there's a lot to think about when you think about the block reward from a miner perspective. And just to clarify, so the reward currently is made up of the subsidy, which is the programmatic, quote unquote, new Bitcoins, the Coinbase transaction that are mined whenever blocks are found. Then you also have the transaction fees, and those together, transaction fees plus subsidy equals total reward. So you see a lot of variations with that as cycles go on. Like right after the halving, we saw some of the biggest block rewards ever because we saw people trying to get the quote unquote rare sats, which we're not going to go into all that, but I mean that drove up fees for a little bit. Like, I mean, there were some blocks that had 21 Bitcoin rewards, and that was right after the subsidy halved from 6.25 to 3.125. And so you have to look at that where you have a fee market already, and we've only seen very few blocks where the fees were actually higher than the subsidy. And as we get closer to the last Bitcoin being mined in, I think, around year 2140, we're going to see that margin between the transaction fees and the block reward, or I guess vice versa, the block reward and transaction fees get smaller and smaller until they're going to start fighting with each other on what takes up more of the actual block reward. What's weird to think about, though, is how the price of Bitcoin is going to affect what that margin looks like. Because right now, we just effectively, miners' revenue is denominated in Bitcoin. So after the halving on April 19th, Bitcoin miners' revenue was cut in half, basically, because they were going from making, and this is generalization, they were going from making 6.25 Bitcoin every 10 minutes to 3.125 Bitcoin every 10 minutes immediately. That's just how it works. That's the protocol. But you look back and miners were making 50 Bitcoin every 10 minutes and then 25 Bitcoin every 10 minutes. And you can go back and look at what the price was back whenever we were in those epochs. But you got to look in the fast forward. What is the price of Bitcoin going to do to those somewhat, I guess you could say, minuscule transaction fees? Are those going to take up, the sustainability and the profitability of mining as the price of Bitcoin gets higher? Also, is the competition for the mempool going to remain where it is now? We're not emptying the mempool. Fees are still relatively low, floating around, between 3 and 10 sats per VByte average every time I've checked. And we'll see spikes every now and again with different L2s coming up and different ordinal projects, and we'll see those fees spike. I remember right after the halving, I saw fees that were in the, I want to say 100 sats per VByte or something like that. It was absolutely ridiculous. But you're going to have that. And also, I think that after the last Bitcoin is mined, or I guess the last fraction of the Bitcoin, I guess, the last new Bitcoin that is put into circulation, I think at that point, transaction fees are going to be, the price of Bitcoin is going to negate any sort of fear, I guess, that the protocol will not be sustainable for miners, because it's gonna be a really weird kind of equilibrium that the protocol and miners have to find, because some miners are going to be like, nah, it's over with. Like, transaction fees are going to be all over the place. Who knows? Like, it's not set in stone like it has been with the programmatic distribution schedule. But I think that the price of Bitcoin is going to be so high that, like, we're going to be fine on just transaction fees, even if it is, 1 Bitcoin per block or something like that. I think that the price is going to make it perfectly profitable for miners, but it's going to be a really weird adjustment, and I think we're going to see that with every halving. But it's something that you got to think about as a miner.
I think that was awesome, and thank you for sharing all that. One of the things, like when people ask me, my go-to is breaking down exactly what you said. Look, the block reward is broken down into transaction fees, and then wherever we are in what epoch and how much is given back to the miners. And when that goes away, so then we're going to be living on transaction fees. And you went a little bit deeper there, but I do think maybe that's the best word to use. It's going to be a weird situation. It's going to be a time that, and like I said, I think one of the weirdest things is that everyone listening to this now, everyone in Bitcoin now, everyone who's been around for a 50 block reward or a 25 block reward is not likely, unless obviously advances in biotech and other things, not likely going to be around for the 2140 when miners are sitting around like, man, I wonder what it was like to be able to do a transaction for, I don't know, a couple dollars. Because I do think that transaction fees are going to be exorbitant when denominated in fiat. Obviously, by then, they'll be 1,000th of a Bitcoin maybe. But obviously, that in fiat could be exorbitant compared to today's Bitcoin fiat conversion. So anyway, anything that you would want to tie into here that we touched upon when you came on the podcast that has to do with like mining hardware evolution? I know looking out to 2140 is nearly possible when we think about hardware evolution, because it was hard for us to even talk about it on the podcast looking out 12 months with some of the developments. But do you have any thoughts around what mining will look like by 2140 from a hardware standpoint? And I know that that's an impossible question. I just figure you're on mic, so why not ask it?
I mean, it's hard to think about what mining is going to look like next year.
Exactly.
But after our podcast episode, I had some people reach out and kind of talk about some of the things that I did touch on, a few things. And Shannon, our CMO, was one of them, and he was talking about how, I mean, the ASIC mining scene is where we are, and that's where we're going to be. The challenge now is how efficient can we get ASICs and make them, make them as good as they can be, so we can, get more hash rate per watt. Basically, is the goal. The goal is efficiency, and how are we going to find that efficiency? I don't know. It's a waiting game on ASIC chips at this point. But I also did a little research and amongst some announcements and stuff that I'd seen fairly recently, and also like over the past year or so. I think that mining is going to go from, at least in the I guess enterprise level, mining is going to go from having a whole facility of JPros that are 30 pounds that you can pick up and hold in your hands, to being something a lot more beefy, I guess. Like you're going to look at a machine, just a visualization of kind of what I'm thinking about is like a much larger machine that you have to have like equipment to move, that might have 25 hash boards in it or something like that. And it's going to take up a lot more power. It might be running on 480, and it might consume, several thousand more watts. But at the scale that you're going to be playing with on when we get to that point, in my head, this is all hypothesis, that efficiency is going to beat out where we are right now with our, I guess you could call them personal machines. And I think that that's the only way that we can go forward, is just make the machines bigger, I guess.
I love that. And I'd never I've never really done the thought experiment of like, what's the Bitcoin mining hardware going to look like in 2140? But that's a very interesting world to think about, because when, I was watching a movie recently, and like, when the IBM computers came out, they took up warehouses. And now I have just as much compute power here in my iPhone, if not more, actually like a lot more. So
it's almost opposite, basically.
It's exactly it's exact opposite.
Yep.
Yeah, because like CPUs, I mean, they're tiny, and then GPUs, obviously, and then so we've gone to ASICs, which are much bigger. And when you pick up an ASIC for the first time, you're like, okay, this is serious hardware. So then to think that, maybe it's going to be something that's like 4 ASICs that's put together, which would kind of be like the size of like a standard duffel bag, to then something that's the size of the desk I'm sitting at, and then so on and so forth. So, anyways, fascinating stuff. I know you got to get back to work. Tatum, thank you so much for hopping on this check-in. If you're listening to this on YouTube, please subscribe. Podcast platforms, please subscribe. Follow us at Compass Mining on X, LinkedIn, and YouTube. Tatum, thanks so much, man.
Absolutely.